All right, recently, energy stocks have been the topic. We've been seeing a handful of these energy stocks now for just over a week exploding and taking off as the Russian and Ukraine war starts to get intense and deeper. The indexes have just been getting destroyed in the stock market recently. Even today's indexes are all red. Let's look at the SPY just as a reference real quick. This is the S&P 500 1 minute chart here. And you see it's just been getting drilled down all day from 432 all the way down now to 422. So it's down 10 points on the day. We scroll out on this, the last 3 days, it's been getting drilled down 441 all the way down to 422. But we've been seeing a lot of energy stocks pop up. INDO, look at this. This is just insane. Back 4 days ago, it was at $12 a share. Now we're running up to $80. Day one, 12 runs up to 16. Then we get a gap up to 20 bucks. We run up to 26. We pull back here. This right here is where a lot of shorts got trapped if they were trying to top pick on this, and they see multiple tops up here. It's been running nonstop up like this. They think it's the end. They get in and short it. The next day they wake up and it's gapping up right here. Shorts are underwater. They have to cover, squeezing the stock up higher, and all this volume nonstop flowing into it. This was Friday trading right here. This day right here was Friday. Friday we ran from 22 up to a high of $52, $54 a share. Just insane, life-changing opportunities. We see a handful of these types of moves throughout the year, a handful of them. Just think about it. One move like this in a trade and just hold on to it for a week, this could make your whole year with maybe just 500, 1,000 shares. We see this multiple times, and I'm telling you, the more I see this in my career, I'm going on year 7 now as a trader, you start to be more accepting to these types of trades. You get more familiar with them, comfortable with them. But when you're brand new, these types of moves could be account killers, and we're going to explain why. Over my career, like I've said, I've seen multiple run-ups like this. We get about, on average, I would say, stocks that just go full parabolic supernova, we get about, I'm going to say about 4 to 5 of them every year. And you never know when it's going to happen, but you know when stocks have potential to do it. When they start to heat up and take off, you pick up on it real quickly. And the more times you catch these, like I said, the more comfortable you get with them, and then you pick up on a lot of the characteristics. Friday trading here, we got a nice ramp up to 32. We get a nice tight pullback. This morning it trended all up right here from 22 up to a high of 33. We top out, and then we go into this consolidation, and this is what a lot of traders would call something like the ABC pattern or ABCD pattern. We got, I'm going to get out my pen here. So it'd be like this. I'm going to make it a little bit bigger, and I'm going to put my A right here, and then B is going to be right here, and then C is right here. So this is something a lot of traders would call ABC pattern. I forget if there's a D involved. We're all different. The way all these patterns work, you guys, is all of us see these same patterns, and they've been the same for years and years and years, hundreds of years. They've been the same pattern, but people recognize little characteristics. They put their own little twist on it. They repackage it, and then they try to sell it to you as if it's a new strategy or something new people don't know about. But bottom line, at the end of the day, these patterns are the same. Everybody sees them. There's nothing new about these patterns. So the ABC pattern, a stock that has a nice morning run, like right here, that's your A, and then your B is lunch hours consolidation. And you could see here with this, the stock topped out, and then it formed this right here at VWAP. It held above VWAP, and it formed this wedge here starting at just before 10:30 all the way up until 12:30. So 2 hours. This stock consolidated and wedged out right here. And from that 28 bucks and holding above this yellow line, which is the VWAP, it starts to grind up and pick up, starts to lift up to the highs, the high of day right here. It's a nice little micro pullback right here. And then from there, that's when all the volume starts to come back from lunch. And it's as the saying goes, and this isn't something I can just teach you to be comfortable with, but the saying goes, if a stock is in a pattern or a consolidation, once it chooses a direction, whether that be up or down, chances are it's going to continue going in that direction. So after this stock consolidated and wedged out here for 2 hours, it rested, it picked a direction, it starts to trend up, test its highs. Chances are it's going to continue to keep going. And big picture ideas like that help you mentally to feel comfortable holding on to these types of plays. And the more you do it, the more you realize this and you see it time and time again. This is when it's like a self-fulfilling prophecy and you start to trust in what you know and you focus on the big picture at hand. All this volume starts showing up. Now we go into the C part. We start ramping up here from 28, 29, all the way up to a high of almost $50 a share. That's a wild, wild move there. Once you get your euphoric explosion here, stock, once again, it has to take a break. So we start to pull back right here. We're pulling back, and there's a few ways you can do this. You could measure from the low here where it was consolidating at, measure with your Fibonacci retracement up to the high right here. So let me get out my Fibonacci retracement. Measure from the low here up to the high. And as you see, when the stock started to retrace here, it retraced. First, it retraced right here to this 38.2 level right here. Then it bounced up and it was finding resistance at this 23.6 retracement level. Fell down and it fell right through that 50% and it held up right here at the golden ratio, that 61.8 level. But with Fibonacci retracement, it should be a tool for you to use and not be afraid to use and experiment with. Measure these types of moves and you get an idea and you visually learn better on how these stocks like to move up and then retrace down through levels. It's a real super handy tool to have in your back pocket. So that's the ABC pattern that a lot of people out there trade, and it's a very textbook pattern. And this was Friday trading. Now let's fast forward into today. I see that INDO is halted. We scroll out. We either exploded up or this stock, yep, it just exploded up. And we're going to jump into another key topic that I want to get into with this. A stock this volatile, if you're new, I would stay far away from volatile stocks like this because it's just going to chew you up, spit you out, and it's not going to be pretty. A stock this volatile, it just literally reopened back up. So it's going to watch how fast this thing, it's going to continue ripping up. That's a wicked explosion. This thing is going to go absolutely bonkers. The stock is officially going from in one day, 110%. This thing's a straight up freight train, like the world's biggest freight train. There's nobody stopping this besides the exchange. But look at the volatility in the candles here. For newer type of traders coming into this, they're more focused on, and I've been there, you're more scalping. You're jumping in quickly, your adrenaline's kicking in, you're chasing after those high of day breaks, you're scalping. You're getting in real quick, and then 3 seconds, 5 seconds later, you're selling for hopefully a profit. And you're probably market ordering in, you're market ordering out, so you're screwing up your average. You're inexperienced. You don't have no experience in this type of field right here. So you got to build it up. In a stock like this, it's going to chew you up and spit you out. You really got to pay attention to the big picture at hand, and you really need to be cautious with your size. So this morning we run up right out of the open from 44 up here to 54, and then in one 1 minute candle right there. Look at the volatility on this right here from 52.50, it flushed down to 45. So a $10 1 minute candle. That's a big range in volatility. So considering your size is super important for this. Super important, because if you're holding 1,000 shares, it flushes down $10 like that. You just lost $10,000 in a blink of an eye. You have to respect this stock and the volatility. And people get drawn to this stock because all they see is the upside reward. They don't see the downside risk. So always look at the downside risk first, guys. Always. This helps consider your size as well. They're going to play multiple games with you. Look at right here. We ramp back up right here, topping out at 64 from the low of day right here, about 42. We ramp up here. And then the stock wants to wedge out right here, doesn't it? Sets up a wedge, and then it breaks up from that wedge. Right here at around $60, it rips up to a halt up there at 68. Guess what would have happened if you chased after this stock? This stock gets halted for 5 minutes. They halt it up here at 68 bucks. They reopened it right here at around $60. And then it quickly ripped up fast, and then they slam it down here to 54 bucks. So ultimately, if you would have chased after this, my guess, you probably would have lost money. You probably would have, because the volatility in this and how fast it's moving, market in, market out, this thing's moving so fast. Look at the range on it, $68 to $56. That's a $12 range on this stock. Even with the volatility on something like this, and even how nasty this candle right here is, overall, technically, this was still a bullish setup. How many times have we seen stocks break out from a pattern and then pull back and then hold at the area where it broke out from? And that $57, $56 right here, it held where it broke out from the pattern. Technically, that's still bullish. And this stock went on an epic run all the way up to $80 up here. Now we're getting a micro pullback right here. This is gearing up to want to try and test that $100. So I'm glad I'm kept capturing this real time and breaking this all down. And even when this stock was all crumbling right here after it topped out at 76, look at how with your eye you can pick up on how volume just naturally decreases here, and it's wedging out with the volume. So again, I would get something like my Fibonacci tool from the low right here, measure up to the high. It's pulling back at that 23.6 right here. This can pull down here to 77, 75. You're probably going to want to see it hold up right here for a move up higher. So that's at 75 bucks. So a $10 fall down holds up at this level. Everybody's going to be eyeing that $100. But with a stock like this, it's up so much. Let's look at real quickly all of the other stocks that are up and in play. We got HUSA. This is an energy stock. Says it right there. This morning from $3 up to $8.75. And look, it's doing the same exact thing right now as INDO, an old stock. This stock has been around forever. When I first started learning about the stock market way back, CEI, Chamber Energy, this stock has always been around. From 86 pennies up to $1.50 today. What else we got? IMPP, Imperial, running from 450 up to a high of 825. Energy stocks has been the theme recently, and a lot of energy stocks have been exploding for over a week now. It's the new current theme. So focus on the big picture when stocks start to get to out of hand like this. It can be hard trying to scalp stuff like this. And also too, when new people get in on this, they get greedy and they wanna linger around and overtrade it and try to make as much money as possible, when all they're gonna do is just battle themselves all day, getting in, getting out, trying to quickly scalp the range and volatility of it. And they're going to give back profits. They may ultimately give back all of their profits. They may drill down their account. If it breaks over that 100, this thing's going to run 125, 150. This thing could really get out of hand. I've seen it multiple times before. So give this time right here. Let it pull back, gear up. It's gearing up for that run up to 100. Now we're going to jump into part 2 of this technical analysis breakdown on INDO. When we were first talking about INDO and breaking it down, the price action was going on right here on this day. Since then, we have now had 1, 2, 3, 4 days of trading continue and go on into the future. And look at how quickly INDO fell apart up there from $86, $87 all the way down to around $25 a share. We were talking about INDO gearing up for that $100 move, and it tested high of day at that 86, 87 multiple times, but failed to continue. We know that the stock has went on an insane run to the upside. This is why I like to refer to the saying, when a stock makes moves like this, it's so far gone from reality, you have to be super, super cautious. Let's look at the 10-minute line chart real quickly. We'll blow this up and zoom out. Here you can see there was a few stages that got this up and going. One right here where it started to perk up. It had this nice up move right here. It pulled back, and then we went into a consolidation there from February 1st all the way to February 23rd. So around 3 weeks, this stock consolidated and rested all right here after this first little pop. Then on February 22nd, February 23rd, we got another up move right here. Once again, pulls back, consolidates, forming this wedge. Then you get your another move, your next leg up, as they would say, running up to $14. From that top out, you pull back again, gets another retest of its highs up here, pulls back again. It's pulling back and gearing up for that next leg up. So since this first move here, we've now had 1, 3, 4 new legs to the upside and or testing the high. So it's already starting to heat up and getting a bit exaggerated, isn't it? And this is where it pays to look at these bigger time frames and the story that's being told. Go back to day 1 or page 1 and put the story together for you to make sense of it. How is the story playing out? All this first pop here with the volume, you see it there. Then there's no volume. You got another little pop here on this volume. That long consolidation, that void in volume, there's nothing going on all right here. The stock is resting. I like to refer to stocks. You guys, you know this. Look at stocks as if they're people. They're going to want to run a marathon. You run, take a break, you're going to want to rest. Run, take a break, you're going to want to rest. Just like at work, working an 8-hour shift. You get a lunch break, you get a couple 15-minute breaks. Same thing with stock. Look at it like that. Stocks are people. They're all going to have their own personalities, how they like to move, just like us human beings. We're all different. So we got the retest of high here. Then we pull back and consolidate again. Then we get another leg up right here, up to $25. Then it starts to crumble a little bit, but was able to quickly reclaim itself and continue pushing up for its next leg, pulls back, next leg up, pulls back, next leg up. And it continues this. And look at it, how extreme this up move is looking now that you look at it, right? Being up this high all the way up here, that's pretty extreme from starting at way down here, isn't it? So So that's why I like to say, take a minute, look back, and tell yourself, like, wow, this stock, it truly is. It's so far gone from reality. It's up way too much, way too much. That's a phenomenal run from February 22nd right here, topping out March 7th. So 2 weeks, this stock ran up nonstop. So with a run up like this, it's going to quickly crumble and fall apart hard and fast. And it's a shame. And when you break it down and look at this chart like this, let's pull up another example real quick. And this is, we've pulled this up multiple times and talked about it in the Discord and in the chat room throughout the week. If you guys are not a part of the Discord here at Trading Learning 101, there should be a link down in the video description. Monday through Friday, we're all up in here in the chat calling out stocks, what we're seeing in the markets. We're always posting charts of the day in here, and you're visually seeing what other people are looking for in this market and their perception and how they view the market, their beliefs. What are they seeing? What are they looking at? And we have a lot of great people in here, you guys. A lot of great people in here, and it's other traders looking for opportunity. That's the way you got to look at it. Now, let me pull up the euphoric chart here. We'll pull up this one. It's a bit more simpler. As you can see with this example, this is an euphoric chart, as I like to teach people. You have your startup right here, starts to heat up in its first little sell-off. That's what we had when we pull back up INDO. Its first little pop-up right here. It started to pop up, and then it got its first pullback, and it consolidated for a few weeks. And then from that, it's a bear trap, and then it starts to get media attention, enthusiasm, and then greed and delusion. That's when we start ramping and really starting to shoot up like this. It's going full euphoric. Everybody's talking about it. Everybody's excited for it. They get unrealistic expectations because they've seen this stock just reward and run up so much. They start to get big eyes, and that's where the greed steps in. When people look at this chart right here, they're instantly looking at, wow, this thing was at $4 and it ran all the way up to $85 a share in 2 weeks. That's all they see is the reward. They don't see none of the downside when this starts to crumble and fall apart right here. So viewing this chart right here to the euphoric chart right here, it looks pretty similar, doesn't it? Very similar. And this is a lesson, you guys, that human nature does not change. And us as traders, this is where we study the past. Consider yourself a glorified history buff. You're going through and you're taking all types of pictures of charts. Look at all of these charts here that I have on my desktop, and I'm taking pictures of these charts, breaking them down, studying them, picking up on any patterns that I'm seeing for potential in the future. And then this is where you also emotionally train yourself. You're visualizing these patterns. You're getting that experience and screen time under your belt. That way, when these situations do pop up, you have a few under your belt and you know how to handle yourself properly. See, for a rookie and a beginner, seeing stocks run like this, for this example, from $5 right here, running all the way up to a high of $9, in literally an hour and a half, it runs up $4 a share. Then it pulls all the way back down, consolidates, and then the next morning it's gapping up, hitting $10 a share. Most new people out there and rookies, they have no experience in seeing this, so they're all super excited, and that's how they lose money. They let their emotions get the best of them. And the crazy thing about it is they don't even realize that their emotions are dictating their trades. That's the crazy thing about it. Now, as a professional trader, you have what I like to say, you're emotionally conditioning yourself. You've seen this multiple times before. And from that and all of that studying, This is where you're able to capitalize on the opportunity at hand. And that's what we do as traders. Same thing when you look at AMC, GameStop. That's why I tried warning everybody when AMC was running up so much and everybody was starting to go full euphoric and parabolic for it. Look at how AMC starts to perk up all right here. Then it gets this consolidation and rest. And then it got that euphoric run up from that $10 level here. It ran all the way up to a high of $72 a share. That's a bit extreme, don't you think? And for stock prices to be up that high, look what has happened from June right there. It's continuously just getting drilled down, and it's currently at $14 a share. So imagine back people all buying in here at $72, $50, $30. They're all down in the hole right now, aren't they? They're all hoping that this stock right here now comes back so they have a chance, maybe a chance at breaking even. This is where it pays to be around, have that experience, and you're studying these charts, guys, because you truly do see human nature play out time and time and time again. You truly do. Now let's go back to INDO here. Since this big run up, now this stock is starting to pull back and fall and crumble and fall apart. There still is opportunity there. There really, truly is opportunity. The energy sector has been super hot. We were seeing a lot of energy stocks pop and run with this craze that went on with the war that's going on with Russia and Ukraine, all of that stuff. IMPP, let's look at a couple examples. This one, an energy, gas, oil related stocks. It ran from 50 cents running all the way up to $9 a share. That's just one. And we had a handful. HUSA, Houston Energy, ran from $1.25 right here all the way up to a high of $14.50 a share. That's a phenomenal run. And look at how quickly this thing has crumbled from the highs right here. It's not necessarily over with, you guys. As professional traders, we know all eyes are on these energy stocks. So we keep eyes on them for any follow through, bounces, reversals. There's all types of opportunities on these. It's just all about how you prepare yourself to take advantage of these situations. Another example, energy stock, NINE is another name. This one went from $1 all the way up to a high of $7.50. USEG, U.S. Energy Corporation, went from $3.75 all the way up to a high of $12.25. And the great thing about this right now, the indexes in the United States markets and the markets all over the world really have not really been great. We look at the SPY, the S&P 500 index, scroll out on this on a 10-minute, this has just been getting drilled down recently and making lower highs and lower lows, hasn't it? Even if we look at the daily chart with the SPY, every one candle here is one trading day. In the S&P 500, this is an ETF. Right here, January 4th, 2022, we topped out, making an all-time new high. And since then, all the way 3 months later, March 11th, so over 3 months, we've been trending down like this, making lower highs, lower lows. We're going into a bit of a correction and a pullback in the indexes and markets. Nobody knows how long this will last for. It could last a year, 6 months. It could last 2 years. Nobody truly knows how long a pullback, correction, bear market will last. But what we can do, check up on it every day, see where it's at in its trend. As you can see, we're at the bottom of support in the trend. So, and it's Sunday right now as I'm currently making this video. So going into next week, we could be looking for some upward momentum in the indexes. And if that happens, that could carry over and follow through into our stock. They say 3 out of 4 stocks follow the overall market. And the way I teach you guys here, and again, if you're not a part of the Discord, You truly are missing out on all of the great education. And we are in here every day streaming for members. So get in here, get at it. We're a wolf pack. We stick together. We're all out here to get that money, you guys. All of us. Why not be a part of a community and a crew of dedicated traders, right? Surround yourself with like-minded people. So that's the SPY. It's been getting drilled down. There's really been no opportunity really anywhere. High of day breakouts have been failing. I've always told you guys, I'm not really worried about a bear market correction, because in the stock market, there is always something that's going to be trending and going on. And with this perfect example, what did we have? We've had energy, the energy sector pop up, heat up, and take off. And when you scroll out on energy, there's been really nothing going on with it. It's been getting drilled down, but recently it's starting to perk up. So who knows how long this trend continues to go along for. And even with our INDO, what we were talking about, only be the start. As traders, we continue to monitor these plays until they are not in play anymore. When volume starts to dry up, you're starting to see failed follow through. Always keep eyes on these. Always. Every single day. As we scroll out on this, after this stock topped out on this day here, we were looking for it to run up to 100, but it didn't quite reach that 100 level. It stalled out. Even going into the next trading day, after it crumbled right here, back down to the 60s, 50s area, the next day pre-market, we're running back up and we're trying to retest the highs right there, but it stalled out. That should have been a sign right there that we're failing to continue, and bears are going to start coming in, driving prices lower. And from the highs up there at 85, in half a trading day, prices got drilled all the way down to $35 a share. So a $50 on INDO here within the first half of the trading day. And just by eyeballing this, you can see this stock, it tried leveling out right here, right? This is where it pays to zoom out on your charts and get a big picture idea of what's going on. We start to level out at that level, $32, $33. And from that, we got a nice little bounce right here up to 43 bucks. That's a $10 bounce right there the next day after this one. So 2 days after when we were originally making this video, this stock had a $10 bounce, comes back down to our support, and then pre-market early morning the next day from that 32 again, gets another rip right back up to 50 bucks. So that right there is an $18 bounce to the upside. And if we extend out this line right here, you can see somewhat the stock came right back down to it again, but then crumbled right through it. Now, if this stock was to come back up, what do you think would act as resistance? This line right here at around $32, $33. You take it one day at a time, one level at a time, and ask yourself, where is the stock at currently right now? And as of right now, bears are in control. So the overall sentiment is bearish on INDO until it proves to me otherwise. It breaks a trend, shows strength, and I see bulls are in control. I'm going to sit on my hands and wait. And you do that across the board with all of your energy stock. I wanted to make this video and show you guys the day of, which we were right here, and then fast forward to 3-4 days later and see where the stock was at, to help you guys in seeing how a stock plays out days after it makes its move. I hope you guys learned a lot from this video. If you're new to the channel, hit that subscribe button. Join the Trading Learning 101 community where we all grow as traders and investors. I'm Mr. Wolf. Until next time, have that patience, have that discipline, study, study, study. Later, you guys.